SEBI LODR. Okay. Dear friends, I, Ms. Malika Devendra, Chairperson of Commercial and Allied Law Committee, welcome you all to today's lecture meeting on recent amendments in SEBI LODR and PIT regulations. This lecture meeting is going to be delivered by an eminent faculty and a subject matter expert, that is CS Anshu Agarwal. This event has been organized. This event has been organized by the Commercial and Allied Law Committee. And to give a brief background of the Commercial and Allied Law Committee, we would like to state that our committee's aim is to promote updates regarding amendments in various commercial and allied law. Also, our aim is to educate the society in general regarding the recent amendments in various commercial laws. Friends, as we all know that CTC is in its 99th year, and we promise to keep our aim to educate and provide amendments and updates, right? Conducting various events, lectures, meeting, webinars to help our members upgrade their knowledge about the subject matters. So we welcome you all to be a member of our CTC, and we also encourage you to also participate in various of the programs which we have been organizing throughout. To give a brief background of our today's subject matter expert, that is CS Anshu Agarwal, I will request our committee member Parth Patani to formally introduce our speaker for today.
Hi, thank you, Malika. So for the lecture meeting today, we have a person who is more than qualified and experienced to speak and guide us all on this important topic. CS Anshu Agarwal is a BCom law graduate and a fellow member of the Institute of Company Secretaries of India. She has over 20 years of experience in various corporate laws, mergers and acquisitions, and fundraising activities. She has previously worked with business groups like IIFL, Reliance, and LODR Group, and right now she is the company secretary for the renowned company Borosil, for the Borosil Group. So I would like to welcome Anshu ma'am today, and would request her to enlighten us on this topic. Thank you, ma'am.
Thank you, Parth. Thank you, Malika, for the introduction. Good evening, friends. So let's begin with the topic. So Parth, any protocol before, or we can just straight away start with the topic?
You can straight away start with the topic. Up to you, ma'am. The floor is yours.
Sure, thanks.
And for the participants, in case of any queries, please request to put the same in the chat box. We will take them together at the end of the session. Once ma'am has addressed, we will take all the Q&A at the end. Please, meanwhile, put the questions in the Q&A box, please, and the chat box. Thank you. Over to you, ma'am.
Thank you. Am I audible, everyone? Am I audible properly?
Yes, ma'am.
Yes, perfectly audible.
Okay, great. So pleasure. Thank you. Thank you the committee for inviting me as a speaker. It's really a pleasure addressing this August audience, and thank you to be part of this committee as a speaker. So just one small disclaimer from my side that whatever is I'm going to share the views is my personal view and nothing to do with the company which I'm presently associate or been associate in the past. Just one. Yeah. So moving on with the definition of related party transaction. Is there an echo? One second.
No, you're perfectly audible.
Okay. So let's begin with the topic. Firstly, we'll broadly cover with the LODR amendments and then briefly also some of the major amendments in PIT regulations. So there is a change in the definition of related party in the listing regulations, right? So what is the change? I have put in the table existing as well as the amended provision. So as you can see, the following shall not be treated as a RPT. So what the change, that definition that we're going to discuss, LODR says this particular transaction will not be a related party at all. Okay, sorry, not be related party transaction at all. So what does it say? Following corporate action by the listed entity, which are uniformly applicable or offered to all shareholders in proportion to their shareholding. And the examples are like payment of dividends, subdivision, consolidation, issuance of securities by way of right issue, bonus issue, buyback of securities, and so on. So the before amendment it says by the listed entity, but now that has been removed. The word by the listed entity has now been deleted by virtue of the amendment. So what is the outcome of this change? The outcome is what was happening earlier. If this, we all know that even the transactions of listco with its subsidiary or between two subsidiaries, right? They are all get covered under the definition of related party and the LODR regulations. Because even if a listed entity is not a party, but supposing there are transactions between two subsidiaries, that's also a related party, right? Transaction. So what was happening was, if it is not seen properly, you are not able to see, guys.
No,
It is visible.
It's visible. No issues on that.
Please run it on the presentation mode.
Okay. Better? Okay. So
Yeah, that should work. Yeah.
So following corporate action by the listed entity. So what I was trying to say is that now earlier what was happening, if there was a say declaration of dividend by the subsidiary to the listco, right? So because of the usage of the word by the listed entity, that action was by the subsidiary, right? Not by the listed entity. The example that I gave of declaration of dividend by the subsidiary to the listco, right? Or transaction between two subsidiaries, or any other transaction, say subsidiary was coming with the right issue, etc. So that was not exempted, and hence that was causing problem. That was causing a compliance burden because that was not the intent, and hence the by the listed entity has now been deleted. So now if it is a subsidiary declaring dividend to holding company or right issue or right to transaction between two subsidiary companies, will not be considered as an RPT. Moving on. So now the second amendment is that again the list of these all the classes like these transactions are not considered as RPT. The one earlier we discussed and even now. So before this amendment, fixed deposit was already exempted, right? But now what is exempted is that current account deposit and saving account deposit by banks. So if you are a banking company, then you are accepting current account deposit or saving account deposit, and maybe you are accepting the same from your related parties, directors or the subsidiaries. So that was coming as an ambit of related party before this amendment. So now they have relaxation that if a banking company is taking current account deposit or saving account deposit in compliance with the directions of RBI or central bank, then that particular transaction will not be considered as a related party. This will be relevant more so for companies which are banks, listed entity which are bank and not for other companies. Okay. E is retail purchases. In the earlier point, even the interest acceptance of deposit includes payment of interest thereon. The interest that they will pay on these deposits is also exempted. E point is important. Retail purchases from any listed entity or its subsidiary by its director or by its employees without establishing a business relationship and at the terms which are uniformly applicable offered to all employees and directors. So E point is applicable for all the listed entities, unlike the earlier one which was related to banks. So what was happening? Supposing for my example, I am working for Borosil, which is into the consumer goods. I go to the online website, and if I place an order, it was becoming a related party, right? I am a KMP, I am a company secretary. So that was causing a problem, right? I cannot buy products of my own company being KMP, and that was becoming a related party transaction requiring audit committee approval and so on. Now that has been done away with. It says these transactions, retail transaction, it's a pure retail transaction, right? I buying products, or maybe a hospital, giving services to its directors or KMPs, right? So all these companies. So, like for example, any car or automobile company, the directors buying the car from the company. So all these transactions which are purely retail transactions. So if these transactions are with the listco or the subsidiary by its directors and employees without establishing it, so you're not establishing a business relationship. Suppose in a transaction where you're establishing a business relationship, then it will not be exempted at the terms which are uniformly applicable offered to all the employees and directors. So the next condition is that the terms which you are offering this retail purchase, it should be what you offer to all the employees, and there should be no disparity in the terms. So I think this is a very welcome move. But friends, mind you here, when we are discussing these exemptions, we also have to keep in mind section 177 of the Companies Act. See, these exemptions have come in LODR. Okay, so if we're being a listed company, we all know that we need to comply with Companies Act as well as LODR regulations, listing regulations. So let's take this same exemption of retail purchase. You might get exemption under 188 being in ordinary equals and arm's length, but under 177 where you need every related party transaction, you need to take approval of audit committee. Similar exemption as of now is not there in the Companies Act. So please keep in mind, as of now, this is relaxation only from LODR. So expanded definition of related party, which was getting triggered because of LODR, there you have relaxation. Okay, because if somebody was not related party under Companies Act, but was it becoming related party under listing regulations, there you will get exemption. But unless and until similar exemption is also given in the Companies Act, you will have to be careful about whether this is exempted under 177 or not, and if not, then one take approval of audit committee under section 177 of the Companies Act. Second important amendment in related party transaction is remuneration and sitting fees paid to directors, KMPs, senior management of the listed entity or the subsidiary do not require audit committee approval, provided the individual is not part of promoter group and the payment is not considered material. So before this amendment, you will all agree there was a dual practice in the market. Some companies were taking approval of audit committee for every increase in remuneration of directors, KMPs. Some were taking only NRC approval and board approval. They were not taking audit committee approval, saying that this is not a transaction per se. This is our managerial remuneration and so on. So there was a dual practice in the market before this amendment. But now it has been clarified that there's a clear exemption for remuneration and sitting fees being paid to directors, KMPs and senior management. But there is no exemption for promoter and promoter group. So supposing there is a person on your board who is also happens to be a promoter or also happens to be part of the promoter group. If you are paying sitting fees or remuneration to such director, then that you will have to take to the audit committee also. So NRC also will take, audit committee also, and board. So earlier the confusion and some practices, diverse practices, I think now it's a clear picture that for directors, KMPs and senior management, audit committee approval not required under LODR, whereas for promoter group, audit committee also approval required apart from NRC and board approval. But there is a condition that the payment that we are making to the directors, so supposing if you're making payment to your MD, which the amount of his remuneration is more than the materiality threshold. What is this materiality threshold? Regulation 23. That is more than 10% of the consolidated turnover of the listco. So if this amount is more than the material, then this exemption will not be available. Okay. The next point is about, we all know that all the related party transactions are required to be disclosed on a half-yearly basis, 23.9 under Regulation 23.9 of LODR to the stock exchanges. We all file that 23.9 on same day of date of the result to the stock exchanges. So it says now that in that related party disclosure that we file to stock exchanges, these transactions, that is remuneration and sitting fees to directors, KMP and SMP, is also not required to be disclosed in that particular report. But mind you, if it is to promote and promoter group, that will require it to be disclosed. So why this disclosure has also been a given exemption? Because a lot of companies reported to SEBI that this was giving them competitive disadvantage of that all the salaries of the SMPs, XMPs, otherwise which is not required to be disclosed as a part of annual report. Certain things we have to disclose in the annual report, there is no option. But in this process, certain more information was going up to the market, which they were not comfortable with, and hence this exemption has been considered by SEBI. Further, something more on related party. So, ratification. So no, we up to amendment, we all used to always say under LODR there is always a prior approval, no post facto approval. Although Companies Act section 177 to 188 did talk about ratification, but there was no corresponding ratification provision under SEBI listing regulations, which has now been brought at par with the Companies Act, that related party transactions can be ratified by the audit committee of the listed entity within 3 months or at the next audit committee meeting, whichever is earlier, under the following conditions. Which are the conditions? Total value of transaction to the related party, whether individually or taken together during a financial year, does not exceed 1 crore. So that transaction for which you are going to the audit committee for approval with that related party, the value of the transaction, either one transaction or cumulative, all the transactions that you are going for ratification should not exceed 1 CR in a financial year. Again, the same thing, transaction shall not be classified as material. What is material we just discussed? Failing to seek a prior approval is presented to the audit committee at the time of ratification. So when we are going to the audit committee for ratification, what was the reason that stopped the management from taking the prior approval has to be explained to the audit committee. You just can't say, "Go, sir, भूल गया था इसके लिए वो कर लिया अभी या किसी ने ध्यान नहीं दिया." You have to give a proper justification to the audit committee why you are coming for ratification and why did you not take prior approval. What was so business exigency that you have to do this transaction without prior approval? Ratification details to be disclosed along with related party transaction disclosure as required under 29. So in the half-yearly disclosure that we filed with with stock exchanges, in that these transactions needs to be, apart from the transaction, we also need to disclose in this 23.9 disclosure that this transaction was ratified. That meaning thereby I did not have the prior approval, the audit committee approval was not there, and this was subsequently ratified by the audit committee, needs to be disclosed in the half-yearly disclosure. Such other conditions as may be specified by audit committee, means if your audit committee has specified some more conditions for ratification, that also will be applicable. Lastly, that if you go to the audit committee for asking for ratification, but audit committee does not ratify it, it has some reservation, it is not comfortable with the transaction, then such transaction shall be voidable. Audit committee can set aside this transaction, and in such a scenario, the director who had approved that transaction will be liable to indemnify the listed entity against any loss, if any. Exemptions of related party, moving on, furthermore transactions. So there are two exemptions which have been added under related party framework. Transactions involving payment of statutory fees, charges between fees, statutory dues, fees and charges between an entity and the central government and state government or any combination thereof. So if you are, this is again will be related only to the public sector and etc. companies, whereby your the entity authorities to whom you are paying tax, income tax, GST and etc. professional tax, and those entities or government authorities, government bodies are your related party. For a normal corporate, this will not be, the exemption is not applicable. But if you are such a company where like public sector companies or government company, and if you're paying the dues, then that dues payment will not be considered as a related party transaction, is the exemption here. But again, not relevant to a normal corporate. Transaction between a public sector company and a central government or state government. So earlier this was two government companies, now it has been said public sector company and the central government. Again, not applicable to the masses, only applicable for public sector company or CG companies, central government, state government, etc. companies. So a few actionable arising out of the related party is that we all need to see the related party transactions policy that each listed company needs to have. That what is the because related party transaction policy would have certain framework of regulation also as part of its policy. You will need to see that if in light of these amendments, what are the changes required to be done in the policy. That's your actionable immediately in the coming audit committee or board meeting. And of course, you need to sensitize the audit committee and internal management about all these amendments. Moving on, RPT we have covered. Half-yearly definition, which was given in LODR, has now been removed because it was, still some of the companies are still having the financial year as calendar year, and hence this was causing confusion, and hence they have thought it fit to remove the definition. No repercussion per se of this deletion, and has not dwelling much on it. Securities law again. On the right hand side amended provision, you can see the red, whatever is in red font is the addition that general and special orders of SEBI or any subordinate legislation framed by the SEBI would also be considered as a part of securities law. See, generally whatever was the informal guidance note and etc., whether this will also or mini order in any other case, we will, the time will send, but I don't see any immediate change repercussion of this. Definition of SR equity share, that is SR equity shares means equity shares of a listed entity having superior voting rights. So this was again not much impact, this was not defined and which has now been defined, but this was always there in the LODR as a part of the procedural part. General obligation of compliance. So as you see, before this amendment, the listed entity shall ensure that key managerial personnel, directors, promoters, or other person dealing in the listed entity complies with the responsibilities and obligations assigned to them under these regulations. So before the amendment, the responsibility of compliance of LODR, whether it is of KMP or listco directors, the responsibility, the wording was listed entity shall ensure. The responsibility was casted upon the listed entity. Now the amendment has added a provision. While the responsibility of listed entity is always there, continues, but a similar responsibility has been casted on KMPs, directors, promoter group, or other person dealing with this entity. So this is a very welcome change. Like company secretary has to disclose something, right? Which does not company promote. Supposing a person is falling into the definition of promoter group, and you are not aware. So now it is equal responsibility has been given on the promoter, on a person or entity which is falling on the promoter group to disclose to the listed entity that I am falling into this definition. So like this was just one instance. Many other instances where the disclosure required because of some involvement of directors, promoters, something which requires disclosure under regulation 30. And if that does not come to the listco or the company secretary, how would they comply? And hence, this similar responsibility has been casted upon these categories of people to disclose the information so that listed entity and the company secretary can do the compliance. Regulation 6. A listed entity shall appoint a qualified company secretary as the compliance officer. So, this was always there that only qualified company secretary can be a compliance officer. This which compliance officer we are talking about is this, we are talking about the compliance officer under the listing regulations, right? So what is the amendment now? The one which you can see in red is the amendment. It says compliance officer should be in whole-time employment of the listed entity, not more than one level below board of directors, and shall be designated as a KMP. So firstly, he or she has to be in the whole-time employment. He or she should be designated compulsory as a KMP, and not more than one level below. So the person should not be more than one level below board of directors. So here there has been a lot of discussion when this amendment has come, that whether the company secretary who is reporting to CFO, whether the company secretary is reporting to the legal head or general counsel, whether all that needs to be changed, because that person may not be a board level person, right? And even the intent is, it's not that company secretary has to report to the whole board, right? It's a body. You cannot report to the whole body. So what it means appears is that that person whom company secretary has to be necessarily reporting to someone who is a board level, maybe chairman of the board, maybe MD, managing director, maybe a whole-time director, but person necessarily has to be at the board level. Cannot be a non-board member like a legal head or a CFO. So necessarily he or she has to report to somebody at the board level and shall be designated a KMP necessarily. So you might say that company secretary is always a KMP, but in some companies, which could be a very little, but there are some companies which I know that compliance officer is not as the same person. Compliance officer under listing regulations is not the same person as a company secretary. Company secretary, pure company secretary designation of one person, and there is another person who is designated as a compliance officer for compliance of listing regulations. So we are talking about that particular person, compliance officer. It says that he or she also has to be designated a KMP. And of course, he or she has to be in the whole time employment of the listed entity. So if at all in companies the person is not reporting to the board level, I think needs to be changed. Filing of information, I think by now we all are well aware that now the filings will be divided into, this is about integrated filing. So now even as of we speak, CG is one file, you file in any stock exchange, so is investor grievance, reconciliation report, and 144 the meeting of shareholders voting result. So these are the compliances as of now which have been integrated, and I think going forward of all the compliances probably one by one will be integrated. So I think here only we can talk a little more about filing of governance related filing and financial related filing. I think we all know that in governance related filing, apart from CG, the regular standard CG format, now a few more things have been added. One is about acquisition. When we deal about acquisition disclosure, we'll discuss more in detail. One is about acquisition. Second is about fine and penalty, and third is about RPT. No, RPT is another. Fine, penalty, acquisition, and tax, outstanding tax litigations. The three things is now part of integrated report. For this quarter, integrated report extended timeline has been given of 45 days. And I think in the latest circular, exchanges have clarified that even the XBRL can be filed up to 45 days. And there will be another financial related filing that also needs to be filed within 45 days of the end of the quarter. And in that, they have merged the RPT compliances 23.9. And also the default in the loan, if any, but default in the loan, if any, etc. All this part of integrated financial reporting filing, but that will be applicable only if there is a default, and not that every company has to fill something. But if there is a default, then you have that, only that will get triggered. Okay. So grievance redressal, I think we discussed that it will be now part of integrated reporting. 15.2 is about, there are some companies whose net worth and equity share capital is much lesser. So earlier, there was a bit of confusion. The charging section always talked about equity share capital and net worth, but there was a proviso about that when it will become not be applicable. There was this word used, or, as you can see on the screen, equity share capital or net worth, and hence it was some companies were taking a stand that if either of my capital, either of this equity share capital or net worth is below threshold, then they will not be required to do compliances of regulation 17 to 27, that is corporate governance related provisions, which has now been clarified that or has been replaced with and says in order to be small companies regulation 1727 corporate governance regulations not to be applicable, it will be not applicable only if equity share capital and net worth and both the conditions are met by the listed entity, whatever is the threshold prescribed for continuous 3 consecutive financial years, if both this equity share capital is below, net worth is below threshold, then only this exemption would be applicable. Basically, this or has been clarified with and. Definition of wholesale subsidy, not much change. Only change is that income has been replaced with the turnover. Some people I know have been told that were taking, because of the uses of the word income, some people were taking stand that मुझे वो gross income लेना है, net profit लेना है, income ले रहे थे instead of turnover, and hence this has been now modified. The intention was always turnover. This has now been clarified that income has been changed to turnover. Okay, as definition in senior, change in definition of senior management, as we discussed that a compliance officer under listed regulations has to be a KMP, has also to be designated as a KMP, and I think as a fallout of that change, there is a change in the SMP definition that the change. I'm talking only about the change that earlier they used that company secretary and CFO. Now they are saying and any person identified as a key managerial personnel. So key managerial personnel में आपका CS भी आ गया, CFO भी आ गया, compliance officer under listed regulation वो भी आ गया. So rest of the definition remains as it is. The change is to include basically the compliance officer under listed regulations as an SMP. So if your person compliance officer a person other than the CS, then his movement like appointment or resignation will also require as a result of this stock exchange disclosure under regulation 30. CS I'm not taking because CS is anyways which was earlier also required. 17(1)(a). So what it's earlier says the clarification on appointment or reappointment of non-executive director not attaining the age of 75 years. So earlier the way it was worded, a few people were taking interpretation that even for 75 years age, the approval of shareholders as is required for appointment, reappointment, whatever the case may be, could be taken within 3 months or could be taken subsequently. Were some people taking a view? And last year, I know that NSC, BSC had sent penalty, has issued penalty notices under this provision for non-compliance of this particular provision to a few companies. And there is some cases also going on with SEBI and SAT, etc. on this particular point. And hence, the stock exchange SEBI has now clarified that it is prior. So no more deliberation, no more confusion. If your person on the board is 75, then before he attains 75, before the person attains age 75, the approval of shareholders, whether it is our appointment or reappointment, also needs to be taken. So in some session, in some other different session, I had heard a query that एक बार अपॉइंटमेंट में ले लिया, पर्सन मेरे बोर्ड पे है जो 75 होने वाला था, उसको मैंने अपॉइंटमेंट के टाइम पे अप्रूवल ले लिया शेयर होल्डर्स का, then whether reappointment के टाइम पे I again need to take approval of shareholders because of 75, the answer is yes. Any which ways for reappointment of a director, you always have to take special resolution, but you also have to mention in case the director is of more than 75 years of age that this is the fact and why you still want to have him on the board. You need to specify even on that point, even it is a case of reappointment. Listed entity shall ensure, so I'll just talk about a change here that what is you can see in red. So it clarifies that that there is a requirement if you appoint somebody new, then you need to take shareholders approval at the next general meeting or within 3 months, whichever is earlier, right? 3 months or next general meeting, whichever is earlier. So in view of this requirement, there is an exemption that if for say IRDA related companies or companies which are governed by civil aviation and etc., no except RBI, wherever you required, if such a company where for a particular appointment of a director, you need approval of regulatory or government authorities and so on, then sometimes the approval itself comes after 3 months. How will you comply with this particular requirement? So in such scenarios, the law provides an exemption that this 3 months will apply from the date of approval. I'm told that for example, particularly for aviation related companies, they need to take approval of the regulatory authority before appointment at the board level, and before they are appointed at the board level, they need to take approval. If that being the case, then this particular exemption of extended time period will not be applicable, because you would have already taken approval of the authority and then appointed on the board. Then you have to comply with 3 months. So this will apply only if post board approval you need to take approval of the regulatory authority. I hope I'm clear. Okay. The another exemption which has come in, that if the person has been appointed or reappointed, who is nominated by a financial sector regulator or a court or tribunal, then for such person who has been nominated by financial sector regulator or court or tribunal, for that person, this requirement of taking approval at the next general meeting or within 3 months will not be applicable. So, friends, earlier this provision was always there that if there is a vacancy in the board of directors at the board, then you need to fill it within 3 months from the date of vacancy. But it was silent about the committees of the board, audit committee, NRC, and etc., where this particular composition required to be followed. There was no per se, something in writing that what needs to be, what is the timeline that in case of such vacancy, that composition needs to be put in order. There was no corresponding provision in LODR on that count, and which is now it says that if there is a vacancy in the board due to or such if you knew it that in the case of completion of tenure and etc., then you have to put that committee composition also in place within 3 months. Of course, I'm so sorry. In case of there is a resignation, then you get 3 months. In case of completion of tenure, you don't get this 3 months. You need to, because you know it, right? Because you knew it that he is going to complete tenure. So in case of completion of tenure, you don't get in this 3 months. You have to put the new director needs to be in place immediately. Also, the committee composition needs to be in place very next day, you can say. But in case of resignation and so on, death or etc., where you didn't know that this is going to happen, you get 3 months timeline for vacancy as well as for composition of committee. Okay, this is not much relevant. In all these places, wherever it was appearing, the word year, it has been now been said financial year. So at least 4 times in a year, which is now says financial year. So is the 17.6 second wala, every year, secondary financial year. 17.11 is new. So in explanatory statement that we give it to shareholders while taking any item shareholders approval, as you can see this along with the rationale. This is something new, that in the explanatory statement for giving for any notice to the shareholders, we also need to specify along with the rationale. But what is the rationale for that particular item needs to be stated very clearly, is the new amendment. So this I'm going to skip. It's just because earlier they were used the term in a year. Now they have said in a financial year. No much repercussion, nothing. So I'm moving on with this. This is not as a result of amendment much, but I had just prepared this. What is the difference? As per Companies Act and SEBI registered regulations. So as per Companies Act says 4 times in a calendar year board meeting, and LODR says at least 4 times in a financial year. And time gap in both the cases is 120 days for 2 consecutive meetings. Doesn't make any difference even if companies say calendar year, financial year. Audit committee, NRC stakeholder is Companies Act does not specify anything, how much meetings etc. to be held. Whereas in listing regulations, you can see audit committee 4 times, NRC 1 year, stakeholders 1 in a financial year, and risk management committee twice in a financial year. Independent directors, Companies Act says once in a financial year. Now SEBI listing regulation says twice in a financial year, but mind you, this is not a mandatory one as of now. 2 is a discretionary requirement. Even if you hold 1 meeting of financially independent directors in financial year, it will be a proper compliance. 2 is a discretionary requirement. Okay, so friends, here also, as we spoke that at least, we all know that 1 independent director from the list scope needs to be also appointed as independent director in the material subsidiary. What is a material subsidiary? We know that a material subsidiary is one whose income or net worth exceeds 20% of the consolidated income or net worth of the list co, right? So here also the corresponding change we discussed earlier also while discussing the definition of material subsidiary, where income has been changed to turnover. There is no change otherwise. So the requirement of appointment of independent director in the material subsidiary, if it is more than 20% material subsidiary, continues. The only and only change is the income has been replaced to turnover. So in the regulation 24, sub-regulation 6 regarding governance relating to subsidiaries, right now what it says is that if you are supposing if you have a material subsidiary, if you are selling or disposing or leasing of the assets amounting to more than 20% of the assets of material subsidiary on an aggregate in a financial year, we need to take a prior approval of shareholders of the listed entity. So that remains as it is. What is the new? What is new is that the red one and the right hand side amended provision. Nothing in this sub-regulation shall be applicable if such sale, disposal, or lease of assets is between two wholly owned subsidiaries of listed entity. So a listed entity has a subsidiary A and subsidiary B, and they both are wholly owned subsidiaries. Then if A is selling assets which are more than 20% in a financial year to B or vice versa, then this requirement of seeking prior approval of shareholders under this regulation by way of special resolution will not get triggered. This is a new exemption. And pretty logical also because both are my wholly owned subsidiary. Okay. So Raj, do you want to take any questions so far, or how do you suggest, or I continue?
Ma'am, you can continue. We can take it at the end itself, ma'am.
Okay, fine. Yeah. So I think secretarial audit much talked about topic. Mandatory peer review secretarial. I think peer review was always mandatory as per the institute. So that is not something new. But what is new is that, see, we all know that a listed company had to do a secretarial audit. Even the material subsidiary of listed company had to do a secretarial audit annex, and the secretarial audit report of the material subsidiary had to be annexed to the annual report of the list code. This was all there, and this is still no change. There is no change. Only thing is now secretarial auditor and what is peer reviewed company secretary has been defined. There is nothing much to discuss on that particular count, but there is more to it. So what is new now? So generally I've seen the practice that up to now, up to the amendment, the secretarial auditors, all the listed companies were appointing them from year to year, financial year to financial year, right, for one particular financial year. And it was the authority was with the board, or at some companies there is a good practice, they were also taking approval of the audit committee, but that's it. The board was the authority, final authority to approve the appointment of the secretarial auditor, which has now been modified that secretarial auditor board has authority only to recommend to the shareholders. It is the shareholders at the general meeting, that is particularly at the annual general meeting, has the authority to approve the appointment of secretarial auditor. Now coming to term, there was, as I said, it was basically there was no term defined under the Companies Act. It was more so as a practice that people were doing it from year to year. But now what it says is that the secretarial auditor needs to be appointed necessarily in case of individual for 5 years and in case of a firm for 10 years. So 5 consecutive years in one period, and it will came another one more 5 consecutive years. So I think certain people have, in the interactions, I have seen a question that, do we have the option, does the listed company has an option to appoint a secretarial auditor for less than 5 years? So is there a scope to 5 years? Okay, we understand that I cannot appoint for more than 5 years, but does the listed company has the discretion to appoint for less than 5 years? Okay, so before the secretarial auditor amendment, we also had a similar provision for appointment of independent director and appointment of statutory auditor, right? I think for appointment of independent director, we are by now clear that we can appoint them for less than 5 years, but in that case, you lose that much particular, like even if you appoint for 1 year, that will be considered as one tenure, right? But in for statutory auditor, even currently, we know that we need to necessarily appoint them for complete 5 years. There is no discretion to appoint statutory auditor for less than 5 years. So now the secretarial auditors have been put at par. You will see all the appointment, remuneration, disqualification, vacation, all the provisions relating to secretarial auditor has been brought at par with this statutory auditor. If you see the disqualification and etc. vacation provisions which has been prescribed by SEBI by virtue of 31st December circular, and if you compare it with 144 of which is applicable to statutory auditor, it is basically at par with some changes, corresponding changes, but it is at par. So again, repeating, secretarial auditor now needs to be recommended by the board to the shareholders and needs to be appointed at the AGM only, not at the EGM or etc. At the AGM, necessarily in case of an individual, the tenure needs to be for 5 years, and in case of firm, the tenure needs to be tenure can be up to 10 years. Not necessarily that a firm है तो मेरे को 10 साल appoint करना जरूरी है. It's a discretion, but it cannot. You don't have a discretion of appointing less than 5 years. Okay. Then another important question is that if in a listed entity, if somebody was or before this amendment, we know this amendment is applicable only with effect from 1st of April 2025. So it is not applicable unlike other provisions which are almost all applicable. Appointment of secretary auditor will become effective only with effect from 1st of April 2025. So in a company where the person was a secretary auditor, say before this amendment for last 10 years, 15 years, whatever is the number, okay, that period will not be counted. It has been very clearly stated in the LODR. But interestingly, when you appoint such a person, when a listed entity again goes now, who has been for 15 years and the listed company will again appoint them for say 5 years as per the requirement, it is the time, it will be interesting to see how the proxy advisors revert on it, whether they will give positive voting, negative voting. We are yet to see because it is yet to be effective, but I have my own views on it because I think that it may not be looked upon favorably by the proxy advisories. Okay, cooling off period, that if a person was a secretarial auditor say 5 years or 10 years, then he needs to be necessarily needs to vacate the office, like give a cooling period of 5 years. For 5 years from the completion of his or her term. Secretarial auditor firm who has completed its term should not be eligible to appoint a secretarial. Same thing is about individual and etc. firm. First was for individual, second is for firm. And same provision, like when the statutory auditor provision had come in 2014, it was clarified. The same is here, that if you are supposing I am a partner in one firm, right, and my tenure in this tenure, the tenure of this particular firm has been completed as a secretarial auditor. Now I go and join another firm, right? Then that firm will also become ineligible to take secretarial audit of this listed entity. That is what it means. Or if it is sharing a common brand name and etc., common partner, then that person, and firm will also be not eligible to be appointed as a secretarial auditor for 5 years, cooling off period of 5 years. Another important thing here is, while taking approval of shareholders at the AGM, these disclosures will necessarily be required to be given in the explanatory statement. Okay, what is the fees payable? What is the fees that you intend to pay to your secretarial auditor? What will be the tenure? In case of a new auditor, and if you are going, whatever is the change in the fees, what was you paying it to the old secretarial auditor and what you are going proposing? If in case there is a change in the auditor, what is the fees proposed to the new auditor? And in case there is a material change, then what is the rationale for such a material change in the fees payable to the new auditor? Basis of recommendation for appointment, including the credentials of the secretarial auditor proposed to be audited. So the secretarial audit individual or firm whom you are proposing to appoint, what was the basis of recommendation? Why does the board feels that this particular individual or firm is a fit person for what are the credentials for appointment as a secretarial auditor? Okay, something more on secretarial audit. that a person shall be eligible for appointment as secretarial auditor to the listed company only if such a person is a peer-reviewed company secretary and has not incurred any of the disqualification as is specified by the board being SEBI. So, in 31st December circular by the SEBI has issued what are the disqualifications and what are the situations where secretarial auditor will be will vacate the office. So, if any of that triggers, like now, for example, if you are a secretarial auditor, you cannot render management services, internal audit services, valuation services, and etc. So, if you are a secretarial auditor and by chance wrongly you and gave any kind of management services and etc., then you will be disqualified, you will vacate the office. So if you have vacated the office for any reason, you have been, like, you are disqualified. So only, even in case of a firm, only the partners who are peer reviewed company secretary, peer reviewed and only those partners can sign the secretarial audit report. If any, I think we discussed it, if any person incurs any disqualification, immediately he will vacate the office as secretarial auditor. A secretarial auditor shall, appointed this regulation, shall provide to this community such other services as is listed below. So as I said, if internal audit management, design and implementation of compliance management system, information system framework, investment advisory, record keeping, all these services are not allowed now. If you are a secretarial auditor, you cannot render these services to the listed entity of which you are a secretarial auditor. Any casual vacancy in the office of secretarial auditor arising out of resignation, death, disqualification must be filled by the board of directors within a period of 3 months. And secretarial auditor appointed must hold the office till the conclusion of the next annual general meeting. So if there is a vacancy, the board is necessary to fill within 3 months, and the new secretarial auditor which the board has appointed, he will hold the office only till the next AGM. And in the AGM, the same person or new person, whomsoever the company wants to appoint, will necessarily be appointed for 5 years. Disqualification, etc. I think I'm not discussing that now. We all can read it. There's not much to discuss. Removal or resignation of secretarial auditor, listed entity may remove the secretarial auditor. So now see, a person has been appointed for secretarial auditor for 5 years, but for some reason, the listed entity wants to remove that person as a secretarial auditor, then it can do so, but it has to go to the shareholders, take approval of shareholders in the annual general meeting, and then listed company can remove the secretarial auditor. Or similarly, secretarial auditor can also has the authority to resign his office before the completion of the term as a secretarial auditor. Not that once the listed company has appointed for 5 years, if you are not comfortable for any reason you want to resign, the secretarial auditor has the leeway to resign before the completion of term as a secretarial auditor. With effect from April 1, we know that secretarial compliance. So the same thing April from secretarial compliance report. Apart from secretarial audit report, we also need to take under regulation 24 a secretarial compliance report. On annual basis, we need to file that report to stock exchanges. So that report you can take either from secretarial auditor or by a peer-reviewed company secretary. So this was always the case, but what is the change is that the other person who, if you're not taking from secretarial auditor from a PCS, that PCS should also be a peer-reviewed PCS who satisfies the conditions. That is 1A, 1B is basically about disqualification and etc. So before we move on to this, I just wanted to add a little more thing on secretarial audit. There is a confusion in the market that for material subsidiary, right? Material subsidiary also we need to take material subsidiary of the list scope. Also we need to take secretarial audit report. So whether this whatever is given in the LODR, for example, board recommend and shareholders appointment required, board cannot approve, board can only recommend. The tenure of 5 years, even the disclosure, whatever is required as per the LODR about the general meeting disclosure at the time of appointment. Whether all this will also be applicable to the material subsidiary. So whether if a listed company has material subsidiary, the material subsidiary secretarial auditor also needs to appoint mandatorily for 5 years. whether there also the board only has to recommend and shareholders of the material subsidiary, or sometimes even the confusion whether that needs to be approved by the LISTCO subsidiary or LISTCO board. No, in my view, that is not the requirement. LODR regulation cannot govern unlisted material subsidiary to that level. That it will still, unlisted subsidiaries can still, board can appoint the secretarial auditor, no need of getting it approved by the shareholders of the material unlisted subsidiary, and the tenure could also be less than 1 year, whatever is like the board decides. This, in my view, there is no requirement for material subsidiary. All this will apply to the LISTCO, yes, but the secretarial auditor of the material subsidiary has to be peer reviewed. That is compulsory, and you have to take a secretarial audit report and annex it with the annual report of the LISTCO. In my view, that's what it says. But moving on to the board meeting disclosures, board meeting disclosures required after the board meetings, after trading hours. So if after trading hours, if your board meeting has closed after normal trading hours, normal trading hours kya hai? We all know 9:15 to 3:30. So if your board meeting has concluded after normal trading hours, but normal trading hours के बाद तो खत्म हुआ है, but more than 3 hours before the beginning of the next trading session, this is also important, then you get 3 hours window instead of 30 minutes. Let's see this with the example. मेरा board meeting सुबह 6 बजे खत्म हुआ है, right? Then I get time till 9 AM. Why? दोनों condition meet हो रहा है. Trading, normal trading hour चालू है इस समय? नहीं चालू है. नेक्स्ट ट्रेडिंग आवर्स कब चालू होगा? 9:15 को. उसके बीच में 6 से 9:15 के बीच में 3 घंटे से ज्यादा का गैप है. यस, देन आई गेट 3 hours. In the next, I've changed the timing. 6:30 to 9:15. 3 घंटे का गैप नहीं है, थोड़ा कम है. सो वहां पे आपको सिर्फ 30 मिनट्स मिलेगा. लेट्स टेक मोर प्रैक्टिकल वन. 3 बजे मीटिंग खत्म हुआ है, सो आपका ट्रेडिंग आवर्स के बाद खत्म नहीं हुआ है. इट्स विद इन ट्रेडिंग आवर्स. 3:30 आपका एंड ट्रेडिंग आवर खत्म होएगा. सो ऑफ कोर्स यू विल गेट 30 मिनट्स. 4:30 को खत्म हुआ मीटिंग, तो नेक्स्ट ट्रेडिंग आवर्स के बाद खत्म हुआ है. यस. नेक्स्ट ट्रेडिंग सेशन को 3 घंटे से ज्यादा बाकी है क्या? यस. तो 7:30, तो 3 घंटा मिलेगा. ओके. Disclosure timelines for litigation or dispute. Regulation 30, sub-regulation 6. It says that in case of any litigation or dispute, if all relevant information regarding claims made against the listed entity under any litigation or dispute, excluding tax-related matter, is maintained in the SDD, that is Structured Digital Database, as per SEBI PIT regulations, the listed entity shall disclose such claims to the stock exchange within 72 hours from receiving the notice. So, यहाँ पे actually word disclose नहीं होना चाहिए था, may होना चाहिए था. कि see, let's first brush up. इसमें क्या बोलते हैं कि अगर आपका मटेरियल है, कोई litigation or dispute material है, which will have impact on the listed entity, then you need to disclose such litigations, right? Under Part D. So you need to disclose such litigations to the stock exchanges within 24 hours. So यहाँ पे आपको बोलता है कि अगर आपने SDD मेंटेन किया है, SDD we all know that we maintain for any UPSI, especially for quarterly result, but not necessarily only quarterly result, any UPSI under insider trading regulations. So अगर SDD आपने मेंटेन किया है, आपके ऊपर कोई litigation और dispute आया है और उसके related सारा जो details है आपने उसके related जो protocols है and the PIT regulation that you have created SDD, you have sent an email to the relevant people who are privy to this information, then that you are not supposed to deal in the securities of the listed entity till the window is again open. You maintain all these checks and balances. Then you will get additional timeline that you can disclose within 72 hours of receiving the notice. Instead of 24 hours, you will get 72 hours. Extra time मिलेगा आपको, 3 दिन का time मिलेगा instead of 24 hours का. In case that requires disclosure, but you need time, right? According to me, why this 72 hours is given? because आपके ऊपर कभी किसी ने dispute claim आ गया, but you need time to understand, go through it, take views of your counsel, read the order, क्या claim है, उसको analyze करेंगे, कितना impact होगा, नहीं होगा. So you all need time. So okay, fine. The SEBI has given us extra time of 72 hours, but so that this no कुछ लोगों को पता है उन लोग उसको टाइम ले रहे हैं इसके लिए वो इंफॉर्मेशन एसिमेट्री नहीं होए इसलिए SEBI said fine you take extra time but at the same time maintain the check and balances that people who are private with us that does not take advantage of it and maintain the SDD and all the checks and balances as per PIT. But I have a point to deliberate here that हम एसडीडी में एज आई सेड किसकी एंट्री करते हैं जिसकी जो कि हम सेंसिटिव मानते हैं अनपब्लिश्ड प्राइस सेंसिटिव मानते हैं राइट सपोजिंग आपने ऐसा कोई लिटिगेशन और डिस्प्यूट था यू एंटर्ड इन यू क्रिएटेड इन एसडीडी नो क्रिएटेड एन इवेंट एंड आफ्टर दैट you there is a conclusion that does not require disclosure. Why? Because you think that this is below materiality and or you think that it will not have any impact on the listed entity. The claim is frivolous claim and you think this does not have any material impact on the listed entity and hence does not require disclosure. So आपने तो SGT बना दिया है as is required. So there is a catch. We create SGT only if it is UPSI, right? And if UPSI है मतलब material होगा तो ही UPSI है. अगर छोटा कोई litigation होगा it is not material and then it will not be UPSI. So this is chicken and egg situation according to me. आपने SGT बना लिया है but ultimately you think that this is not material and hence does not require disclosure. But tomorrow कभी कोई inspection होगा SEBI का और कुछ होगा तो बोलेगा आपने SGT तो बनाया था but disclose क्यों नहीं किया था stock exchange को. So in such situation अगर आपने SGT बनाया था to take advantage of 72 hours, please record it in some email or in the next audit committee meeting or somewhere or in the board meeting that such and such an event had litigation had come in and SGT was created in accordance with that. But this due to this analysis, whatever is your analysis and whatever is the outcome of the analysis, hence this not require disclosure and was hence not disclosed so that it doesn't come on you and why SGT was created but not disclosed. You have a complete rationally recorded with the consent of the audit committee and board. This is just an input from my side. Moving on to here, this there's one as we can see here, excluding tax related claim, right? So some people are interpreting is that tax related dispute or litigation है तो उसको अभी से disclosure नहीं करना है. No friends, that is not what it says. What it says is that टैक्स रिलेटेड मैटर्स को उसने 72 आवर्स नहीं दिया है सेबी ने एक्सटेंडेड टाइमलाइन नहीं दिया है सो दे हैव दिस प्रोविजन इज व्हाट इट सेज इज दैट टैक्स रिलेटेड मैटर के लिए आपको 72 आवर्स नहीं है यू हैव टू डू इट विद इन 24 आवर्स बट in case of other than tax related matter you have this 72 hours of course subject to the creation of HGT that we discussed but please don't take interpretation that henceforth tax related matter does not require disclosure to stock exchanges even if it is material and hence and requires disclosure but यहाँ पे ऐसा मतलब है कि tax related matter disclose नहीं करना है according to me that's not the interpretation that would not be a right interpretation. Okay, a few more clarification on submitting annual report and AGM notice to the stock exchanges. So as per the existing regulations before amendment listed companies were required to submit a copy of the annual report along with notice of AGM to the exchanges not later than the day of dispatch to the shareholders. So currently the word was not later than the day of dispatch to shareholders. So supposing today is my AGM notice going, then I can even if after it is sent to all the shareholders, but as long as I'm doing on the same day, it is fine. But I think that was not the intent and hence they modified on or before the commencement of dispatch. आपने dispatch चालू कर दिया या उसके पहले आपको stock exchange को बताना है. Next is about digital access to annual reports. So before this amendment, as per LODR, if for shareholders we did not have email ID, we were required to send them salient features. Of course, we have not been doing this because there was a circular state of SEBI from the COVID times. So we were anyways not sending this to them through hard copy, but there is now official exemption that in case of shareholders where their email IDs are not available with the listed entity, then also we don't need to send them hard copy of the annual report, which was the earlier requirement. We can just send them a letter. There is the web link where the including the exact path, मतलब आपकी website में investor section का सिर्फ नहीं देना है. It should go. The link should take to the file particular. मतलब आप link खोलेंगे, link press करो तो annual report खोलना चाहिए, ना कि investor section है या ना कि website. So exact path, what it means, where the complete details of the annual report are available. And this is applicable to shareholders who have, as we told, email ID is not registered with the listed entity. So next amendment is earlier timeline to send the annual report at least 21 days before the general meeting has now been omitted. So now there was a requirement in the LODR also correspondingly to the Companies Act that annual report must be sent at least 21 days before the general meeting. So now some people are misinterpreting that कि अभी 21 दिन भेजने का जरूरत नहीं, ऐसा है क्या? That annual report or shareholders notice is that the 21 days requirement has been relaxed? No, that is not the case. Companies, SEBI felt that it is already there in the Companies Act. If tomorrow, we are now in the digital era that unlike earlier days that I think 2 दिन लगता था physical dispatch होने को, same day the mail you send, now you send and 1-2 घंटे में shareholders को मिल जाता है. So email me. So now if tomorrow MC changes that requirement 21 days, SEBI does not have to again change in LODR, and hence they say it is not required to write in an LODR, any which was there as Companies Act, and hence that has been omitted, but it does not mean that 21 days requirement has been done away with. That is very much there in the Companies Act. Regulation 37 that being a listed entity, you have to take NOC of the stock exchanges and SEBI, but there is an exemption that the exemption was always there for merger of a wholly owned subsidiary with its holding company. The addition is that if the scheme is only for writing off the accumulated losses against the share capital of the listed entity or against the reserve of the listed entity, then in such scenario you don't need to take file with the stock exchanges and take their NOC. You just need to file for disclosure purpose, but the NOC requirement will not be applicable. Record date. The earlier requirement of 7 working days has been now reduced to 3 working days. Regulation 37, this record date requirement that Regulation 37 that in scheme of arrangement and etc. You need to fix a record date to issue shareholder shares to the shareholders of the demerged company and etc. So if you need to fix a record date for the scheme of arrangement, then still the record date requirement of 7 days, at least 7 working days in advance. So although for other cases recorded requirement of 7 working days has been reduced to 3, but in case of corporate actions for scheme of arrangement, you will the 7 days working days requirement of LODR, in advance. The time gap between 2 record dates has been reduced from 30 days to 5 days. And requirement of book closure has in physical form has been eliminated because now the physical securities are in which ways very, very less. So anyways, with book closure, I don't think any company were following, which is not now required, hence it has been omitted. Additional website disclosure. So these are the 3 additional documents which are now to be put on the website for every listed company, that is MOA and AOA. So that's one easy one. Brief profile of board of directors, including details of directorship and full-time positions held in other body corporates. So I think this was individual companies were doing all the full profile of the board of directors. Details of directorship is something new. We were not doing that for each and every director on the board of the company. Whichever companies were Indian or foreign, etc. All the companies, हम CG में देखते हैं foreign, it does not include foreign companies, Section 8 company, वैसा सब नहीं करना है. Details of all the directorships and the full-time positions held in other body corporates. So if your director is, be it independent director, be it full-time director, if he or she is holding any full-time position in any body corporate, so you need to disclose that also. So if you have it, fine. Otherwise, you need to write to your directors about this requirement, collect the data and put it on your website. Employee benefit schemes also need to be put on the website. There is one exemption that आपको लगता है कि आपके स्कीम में ऐसा कोई commercial secret है which will affect the competitive position of the listed entity, then that can be redacted. Means आपको उसको portion को आप black out कर सकते हो. But you can do so only with the approval of the board of the company, and you need to inform the board, explain the board that what is that information that you want to redact and why will it affect the commercial secret of the company. The last one, that अभी हम क्या करते हैं, जो भी चीज है हमारे वेबसाइट लिस्टेड एनएससी बीएससी को देते हैं और वही सेम फाइल हमारे वेबसाइट पे भी लगाते हैं लिस्टेड एंटिटी के. So which now it says that instead of doing that, you can give the link, of the stock exchange where you have made the disclosure. You can just give the link on your website instead of putting the document per se, जिससे कि आपका वेबसाइट का लोड कम हो जाएगा. So as we know that going forward, integrated, they are moving towards one single filing system. So जैसे कि अभी CG etc. is one filing single filing system. Probably I think they will move for all the filing single filing system. So currently आपका disclosure अगर किसी एक ही exchange पे मतलब कोई जो integrated में single में नहीं आ रहा है, you need to file with both stock exchanges. You need to give the link of both the exchanges. But I think as I said, going forward, they will come out with all the filings as a single filing system. But till that it happens, if we are taking the advantage of this exemption, this relaxation, we need to give web page of both stock exchanges. 46.2 audio video recordings. Let me just skip this slide and go to a next slide where I have given a tabular one. Schedule of analyst meet and etc. 2 working days in advance, no change. पहले भी था, अभी same है, no amendment. Presentation was, there was no mandatory requirement of giving the presentation to the stock exchanges before beginning of the call. Although I think it's good practice, most of the corporates were giving the presentation before the meeting. But now it is law of the land that we have to give the presentation before the beginning of the meeting. Audio recordings, text trading to 24 hours, no change. There is no change, it remains as it is. Video recording, पहले जो requirement था within 24 hours, which has now been relaxed to 48 hours. Transcript also 5 working days, no change. This could be again an interesting one. Financial results. We all know that listed companies were required to publish their financial results in the newspapers within 48 hours. So that this was a lot of cost every quarterly. So which is now been relaxed, that instead of giving the full financial results as per regulation 33, we can give a QR code. Right? A lot of companies have already come in for this quarter now. So you can refer to it. Instead of giving the full financial results, we can just give a basic information of the company, section 12 information. Don't forget to miss information as per section 12, email ID, etc., website, etc., phone number. Give that and basic 2-liners, and then followed by the QR code. If you want to give the results voluntarily as per regulation 33, you can do so, but QR code has to be given. The earlier requirement of newspaper publication to shareholders has been relaxed. though हम लोग हर AGM उसके पहले जो shareholders को notice देते थे, that is now exempted under LODR. But I was just trying to think कि shareholders की notices का भले LODR से exemption है, but as per regulation 20 and 22, like postal ballot and new voting rules under Companies Act, the requirement of giving newspaper notice as per those rules still continues. So I really don't see any much benefit of this newspaper public exemption for shareholders meeting per se. Of course, it will be beneficial for quarterly results. It will save a lot of cost. But notices to shareholders which was required to be given in newspaper, unless the similar exemption comes in the Companies Act, I don't think much benefit of this. Okay, a few miscellaneous ones. Regulation 7.3. Regulation 7.3 said that listed company has to maintain the in-house share transfer facility, or it needs to have a share transfer agent, and we had to give a yearly compliance certificate to the stock exchanges about compliance of this, which has now been done away with. 39.3, every time you get intimation of loss of share certificate or issued duplicate certificate that was required to be given to stock exchanges, that is no more required. Regulation 40, now physical transfers etc. are not allowed. So lot of these provisions in the regulation 40 which dealt with physical transfer etc. has now been removed, done away with. 44, that requirement of sending proxy forms, it says will not be applicable in case general meeting are held only through electronic mode. This was, since COVID times we had been following it. It is more so that it has been now formalized under proper regulations. A few these are discretionary ones. Listed entity rank 1,000 to 2,000 by market cap, right, are now required to have at least one independent women director on their board. But again, please note that this is not a mandatory requirement. This is a discretionary requirement. So currently, we know that for top 1,000 companies, you need to have one women independent director. They are extending it to below 1,000, but it's a discretionary requirement as of now. Independent directors of top 2,000 listed entities by market cap, they say, must endeavor to hold at least 2 meetings a financial year instead of 1 meeting, 2 meetings for 2,000 companies. But again, this is a discretionary requirement as of now. Listed entities ranked 1,000 to 2,000 may consider risk management committee. We know that companies who are now top 1,000 needs to consider risk management committee. They are voluntarily extending it to entities which are below that rank. Acquisition related amendment. So, as per regulation schedule 3, we know that as before the amendment, if the listed entity was making any acquisition and where it was acquiring shares or voting rights of more than 5%, then it has to do a stock exchange disclosure. That 5% limit has now been revised to 20%. So if you are acquiring control or voting rights or shares in a listed entity, which is 20% or above, then you need to give disclosure instead of 5% earlier. And the change, which was earlier 2% has now been changed to 2%. But it now includes change in extent 5% instead of 2%. So 5 has been replaced with 20 and 2 has been the earlier 2 has been replaced with 5. But there is one more amendment in this, that if you are acquiring in an unlisted entity which is 5% or more, right? यहाँ पे आपको 5% के ऊपर है तो देना है, right? Sorry, 20% है तो देना है और change देना है. But अगर आपने 5% ऊपर लिया है तो आपको वो जो इंटीग्रेटेड फाइलिंग है उसमें देना है, एंड जो भी चेंज है 2% का वो भी देना है अनलिस्टेड कंपनी का. बट अगर लिस्टेड कंपनी का क्यों नहीं देना है? बिकॉज लिस्टेड कंपनी का एनीवेज एज पर टेकओवर कोड वी विल बी गिविंग इज एज पर टेकओवर कोड. सो अनलिस्टेड कंपनी के लिए क्वार्टरली में भी देना है, एंड इफ इट इज बियॉन्ड दिस 5% एक्सेट्रा तो यहाँ पे देना है, मतलब 24 आवर्स में देना है. Requirement to disclose fraud by senior management, excluding promoters, directors or KMP is applicable only if it relates to a listed entity. So अगर आपका सीनियर मैनेजमेंट ने किसी ने फ्रॉड किया है तो भी देना है, तभी डिस्क्लोज करना है if it is related in relation to the listed entity. But to me this clarification also clarifies a lot other way, that does it mean that promoters, directors और KMP ने अगर कुछ फ्रॉड किया है, so even if it is that not related to listed entity तो भी देना है. The regulation is clarified that senior management का अगर fraud है, listed entity के related है तो ही देना है. But it also otherwise clarified that बाकियों का अगर नहीं भी listed entity के related है तो भी देना है. There's a requirement under Schedule 3 कि if any forensic audit has been initiated against any listed entity, then you need to make a disclosure to the stock exchanges, to which they have now clarified that what is the meaning of forensic audit. Maybe there are some people where anything that's like as is given in example that product quality control practices के ऊपर उनका कुछ उनके audit हो रहा है, या manufacturing practices पे audit हो रहा है, recruitment supply chain practices पे कुछ audit हो रहा है किसी ने, तो उसको forensic audit नहीं मानना है. Forensic audit is what if there is any misstatement or siphoning of misappropriation of funds, if any audit is happening due to misstatement or etc. misappropriation, तो ही वो forensic audit है at the LODR. Otherwise, for all the other things that has been mentioned, that is not as a forensic audit and does not require disclosure. This is an important one, fine and penalty. We know under LODR, para A, part A, fine and penalties imposed on the listed entity were required to be disclosed. Now we have seen many such disclosures. The classic case of dustbin, not keeping dustbin outside the KFC case. So the 1,000 rupees penalty was disclosed. So now there was a lot of sometimes listed companies were just giving minuscule 1 rupee also disclosure. So which is now been clarified that there's an amendment that if there's a fine of 1 lakh or more by a sectoral regulator or enforcement agency, or 10 lakh or more by other authorities, then only that is disclosure. So we will be repeating that. अगर sectoral regulator enforcement agency ने penalty या fine लगाया है, then 1 lakh is the limit that you need to disclose. अगर 1 lakh या उससे ज़्यादा है तो disclose करना है within 24 hours. और अगर other authorities judicial ने लगाया है तो 10 lakhs है तो disclose करना है. So I always had this confusion that कौन सी अथॉरिटी सेक्टरल को फिर भी चलो क्लैरिफाइड है कि एनबीएफसी के लिए आरबीआई है, आईआरडीए है, these are sectoral regulatory authorities. But what is an enforcement agency? At least to my mind, I was always having this question. For purpose of this compliance, whom should we consider as enforcement agency? Is income tax an enforcement agency? Is GST an enforcement agency, GST authority? Is ROC, MCA, stock exchanges enforcement agency hai kya? So I think in the concept paper that was floated by SEBI, in that consultation paper, they have clarified that industry standard forum will be coming out with a particular list that which of the authorities should be considered as a sectoral or enforcement agency and which should be considered other authorities. So let's wait for that, how they clarify. But till now, we have to take our judgment that what is the enforcement agency and what is not. So part B of this, which is on the slide, the tabular format that you see. So it also says that आपको वहां पे तो relaxation दे दिया, right? 24 hours में 1 lakh and 10 lakh का. But it says that इससे छोटा amount है कुछ, fine or penalty of lesser amount, that is 1 lakh and 10 lakhs. That should be disclosed on a quarterly basis, integrated filing में, and उसका format दिया है in below format. That is name of authority है, कौन सी authority ने आपको fine penalty लगाया है, listed entity को, उसका क्या nature है, etc. This needs to be given in the tabular format in the governance related filing. यहाँ पे कौन सा देना है, जो उस क्वार्टर का है वही देना है. तो in this quarter, that is when we will be filing first time, October, November, December quarter का ही fine and penalty देना है, not उसके पहले का. So only what has been levied in the OND quarter needs to be disclosed in the first filing under governance related. Disclosure timeline for 36B, I think we have already discussed this, just repeating here, so I'm skipping this. So we discussed, litigation and etc. in detail, that the LODR now clarifies that other than tax related claims, they have given an extended timeline of 72 hours. We discussed about maintaining of SGD and checks and balances under PIT, right? But वहाँ पे tax related claims के लिए exclusion था. And I clarified to you all that ऐसा नहीं है कि tax related claims का disclosure नहीं देना है, disclosure तो देना है, but you don't have extended hours of 72 hours, needs to be done within 24 hours. Just taking that particular tax related claim forward, all income tax, GST related demands, litigation, disputes, assessment, etc. All income tax related etc. matter, demand आया है आपको, needs to be informed within 24 hours of the occurrence of the event. That is, if the amount, cumulative amount involved in such a चीज is material. I'll just explain this. आपको demand notice आता है GST का, tax का. If the amount involved in the demand notice is less than materiality, we all have to follow or calculate our materiality threshold, that is 2 to 5 limit. So if your demand is less than materiality, you don't need to disclose. But if it is more than the materiality amount applicable for your listed entity for that particular financial year, you need to disclose. Even if it is, there is a demand and you don't need to litigate, but there is a demand which is amount which is more than the materiality threshold, you need to disclose. Second point, while determining the materiality of the claims, stated by the department in its demand notice to be considered for materiality, irrespective of our views on this amount. What I'm trying to say is that आपको demand आया है, let's say 5 crore का, right? Which is more than the materiality amount for your listed entity. But your accounts department, your taxation department says, यार ये 5 crore तो गलत calculate किया है. According to us, it should be only 1 CR at max. So then that will be below materiality. What I'm trying to say, in such scenario, disclosure के लिए आपको 5 crore को ही benchmark करना है while checking whether it is more than materiality or not. Whatever you feel is कि 1 crore होगा, वो आपको benchmark नहीं करना है while deciding the disclosure needs to be given or not. This demand henceforth needs to be informed at the stage of receiving the demand. I already said this, and not at the filing of litigation. What I mean to say here is that demand आया है तो disclose करना है. It's other matter that you decide to go with the litigation, you want to file appeal, but there is a demand from income tax authority which is more than your materiality threshold. You need to disclose. This is the exact text from the SEBI Master Circular. I'm not going to read it. I'm just going to read the highlighted important ones that, it says assessment, adjudication. Why I was saying demand karna hai? Assessment orders, adjudication, arbitration, disputes. And the more important is, it's not amendment that against or in favor of the listed entity. So the favor में order है तो भी करना है if it is more than the materiality threshold. Okay. So now but there is one condition that material होना चाहिए. See the last line. In case the amount involved in ongoing litigation or dispute becomes material on a cumulative basis, then the same shall also be required to be disclosed to the stock exchange. So let me explain this. आपका कुछ टैक्स का मैटर चल रहा था, सो जब आपका जो पहले का था that was all cumulative below your materiality threshold. Say 5 CR is the materiality threshold. Up to so far जो भी आपको टैक्स डिमांड्स वगैरह आए, जो भी मैटर था, cumulative was less than 5 CR, आपने डिस्क्लोज नहीं किया. But moment you get the next one and which is exceeding your materiality threshold put together, then you need to disclose. There is one more clarification given that while deciding to clubbing, if the matters are having a correlation, मतलब पहले वाला जो टैक्स डिमांड का जो मैटर है, डिस्प्यूट का मैटर है, उसका जो सब्जेक्ट मैटर है, इट इज आल्सो द सेम इन द नेक्स्ट वन. जो सारे कोरिलेशन वाले मैटर्स हैं, सपोजिंग आपके को डिमांड आया है बिकॉज़ आपका डेप्रिसिएशन आपने जो कैलकुलेट किया है, यू हैव डन इन अ सर्टेन वे, वेयर एज पर टैक्सेशन इट इज नीड्स टू बी एज पर टैक्स अथॉरिटी इट नीड्स टू बी कैलकुलेटेड इन अदर वे. तो अगर आपने वो हर साल में किया है वैसे अगर, तो हर साल का जो क्लेम है इनकम टैक्स का डिमांड, उसको एग्रीगेट करके देखना है आपको whether it will be more than materiality or not to decide the stock exchange disclosure, and not only single each year का देखेंगे और less है इसलिए disclose नहीं किया. That is not the intent. Okay. और कोई नया tax litigation है, as I said कि 24 hours में disclose करना है. So just putting it simple, tax litigation है, materiality है कि amount के ऊपर है, तो आपको disclose करना है. Point number 1. मटेरियलिटी अमाउंट के नीचे है, बट पुट टुगेदर जो सारे रिलेटेड मैटर्स है उनको उसको मिला के मटेरियलिटी के ऊपर है, तो भी आपको डिस्क्लोज करना है. बाकी लिटिगेशन और डिस्प्यूट में आपको 24 आवर्स की जगह 72 आवर्स का टाइम है, दैट नीड्स टू बी डिस्क्लोज इफ इट इज बियॉन्ड मटेरियलिटी थ्रेशोल्ड, एंड यू नीड टू इन्फॉर्म विद 24 आवर्स or 72 आवर्स डिपेंडिंग अपॉन यू आर पेइंग एसडीटी और नॉट. One more interesting point that I have been told no observation that generally जो tax demands आते हैं उनके साथ demand notice के संग आपको कुछ because of delay आपको fine penalty भी लगाता है taxation authority, right? So this particular falls in para B, right? Taxation litigation falls in the para B, whereas you apply during materiality threshold, but fine and penalty falls under para A, right? Schedule 3 of LODR, para A part A. Fine penalty, as we discussed, 1 lakh, 10 lakh, right? So whether tax related fine or penalty, whether that should be whether disclosable or not, whether we should determine it with 1 lakh or 10 lakh or basis materiality is the question that I am raising. In my view, this needs to be disclosed basis the penalty, or since it is the nature of fine and penalty, basis the amount of 1 lakh and 10 lakh and not materiality. So so system driven disclosure, that basically I'm saying is that SEBI has clarified that going forward shareholding pattern, they are still doing it in the working mode. This is still not law of the land, but going forward they are working on the system that listed companies will not be required to file shareholding pattern. It will be automated. SEBI is of course just insider trading mein wo hua hai ki you need to go to the NSDL or CDSL website, whichever is your depository, designated depository, and you put and then login. उनका पैनल आइजिन में लॉक हो जाता है, वो पर्टिकुलर आइजिन के लिए पैन फ्रीज हो जाता है. Similarly, they are working on a model where the listed companies will not be required to file shareholding pattern, and it will be an automated disclosure, and they are working on this. Similarly, ratings or revision in ratings, they are working on a model that it will be automatic system driven disclosure, and the listed companies will not have to file it manually. This I think we have already disclosed. This is about governance related and financial related formats. That was on LODR. Since we are already on 6:30, now we have half an hour, so let's quickly finish in next 10 minutes insider trading, and so we have less 15 minutes for discussions and questions. So on insider trading, there's a definition of connected person: banker, merchant banker, advisor, consultant, and etc. They all fall under the definition of connected person, right? They are connected person. So connected person, SEBI has also clarified in PIT that connected person के पास अपसी है. That is, if the connected person is likely to have अपसी, but connected person के पास जरूरी नहीं है कि अपसी हो. It's a presumption which is rebuttable. That is, if there is an allegation on the connected person by SEBI at any point of time that you did this trade, etc., this is upsi, he or she has an option to say that no, I didn't have this upsi, but connected person is a person who are likely to have access because of their relations and access to the company. So, in the definition of connected person, what is the change in PIT is that earlier it says immediate relative of connected person, right? So that immediate word has been deleted, meaning thereby it's not immediate relative, it's the relative of the connected person will also be deemed to be connected person. Okay, we will just move ahead. That what is the definition of relative has also been given. We'll see that. So the only change here is that in the definition of connected person, instead of the immediate relative, it is relative of connected person. So basically, they have expanded the horizon that instead of few people, relatives, a broader list of relatives will be considered as a connected person. The next is about firm, concern firm, trust, etc., where a connected person is a director. So वहाँ पे immediate relative is director, then also will be direct immediate relative की जगह relative है, then also it will be covered as a connected person. These, as you see on right hand side, K and L are the new additions. There have been new clauses which have been added in the list of connected person. That is, a firm or its partner is employee, in which a connected person, whatever is specified in the list, is also a partner. So basically, अगर कोई firm में connected person या उसका partner या employee है, that will also be considered as a connected person. Lastly, the important a little thought-provoking one is that a person sharing household or residence with a connected person. So आपका वो relative नहीं है, right? आपका relative नहीं है, but आप जिस भी किसी के संग household share करते हो, residence share करते हो, even if is that he or she is a relative or not relative, that person will be deemed as a connected person. Okay. So, as I said, because they have deleted the word immediate and they have added the word relative. So, what is relative has been given, and relative word has been defined. That is spouse, parent of the person or of the spouse, sibling of the person and of the spouse, child of the person and of the spouse. So, relate spouse, parent, sibling, child. Spouse of the person listed in clause 3. That is, आपके बहन या भाई हैं, वो तो है ही, उनके जो spouse है वो भी covered है definition में relative के. and spouse of the person listed in clause 4. Clause 4 is about child of the person or child of the spouse. So child के जो spouse है वो भी covered है. So this is the expanded definition of relative, which will replace the immediate relative definition for connected person. So that was on from my side. Now Raj, the floor is open for any question and answer sessions.
Thank you very much, ma'am. It was really an insightful session. And dear participants, please, if any questions, then you may please raise your hand. You will be given opportunity to speak, and like we can take the questions at this stage. Ma'am, we have one question here. Hemant has asked, our director will turn 75 in the next 2 years. Being aware of this, we have already obtained members' approval for his appointment under section 117(1)(a) for 5 years. Do we need to seek members' approval again once he turns 75?
So if it was a first tenure and if you have taken ordinary resolution before he turns 75, you don't need to take second approval again. And if it was for a second tenure and if you have not taken special resolution, I'm sure you would have taken special resolution, because whether 75 or not, for second tenure, it is necessarily a special resolution. So I hope you have taken special resolution.
Yes.
In that case, again, approval will not be required, because you have already in compliance. You have already done.
Absolutely right.
Before it turns 75. So no requirement of taking it again.
Yeah. Thank you. Yeah.
Thank you very much. Yeah. Next question is from Jagruti. If the mistake is on part of CS, how is independent director responsible?
No, so it does not say the regulation 5. I think Jagruti is talking about the regulation 5 that talked about the now responsibility has been casted on promoters, KMPs, and etc. about compliance of LODR. It does not mean that the mistake is on the part of CS and they are making them accountable. No, that's not the intent, and that's not what I said. What it means is that there are certain compliances. For example, director ने कहीं और fraud किया है या as I give the classic, certain compliances required by directors, also disclosure required. SMP के disclosures हैं, fraud के disclosure है, promoter group का हम classic example लेते हैं, जो बहुत commonly होते मैंने देखा है कि किसी तो भी कोई भी entity नया float हुआ है किधर, जो promoter group बनता है definition में ICDR पे, right? But आपको पता नहीं है वो company hold कर रहा है share, and you are not showing it as in your shareholding person as a promoter group, right? So वो उनके ऊपर रिस्पॉन्सिबिलिटी कास्टेड हो गई है कि उनको ये डिस्क्लोज करना है कि दिस इज द एंटिटी व्हिच इज फॉलिंग इन प्रमोटर ग्रुप. उन्होंने आपको इन्फॉर्म कर दिया और आपने नहीं किया है, देन दे आर नॉट अकाउंटेबल. सो या फिर आप कमिंग टू योर क्वेश्चन जागृति कि आपने कॉर्पोरेट गवर्नेंस रिपोर्ट सीएस ने फाइल नहीं किया या और कोई भी नॉन कंप्लायंस अंडर एलओडीआर व्हिच इज नॉट रिलेटेड टू प्रमोटर और केएमपी एक्सेट्रा, इट वाज योर मिस्टेक, देन दे आर नॉट अकाउंटेबल. दैट इज नॉट व्हाट इट सेज. What it all says is कि उनको कुछ इंफॉर्मेशन कंपनी को देनी थी, सो उन्होंने नहीं दी. इसके लिए जनरली क्या होता था, कंपनी सेक्रेटरीज क्या बोलते थे, हमको तो पता ही नहीं था ऐसा कुछ डिस्क्लोजर हुआ, उधर प्लांट में आग लगी या कुछ हुआ या कुछ भी नोटिस आया, हमको नहीं पता, तो हम कैसे डिस्क्लोजर देवे, राइट? दैट इज द कॉमन कंप्लेंट दैट वी हैव. सो नाउ इक्वल रिस्पांसिबिलिटी हैज बीन गिवन देम कि फॉर देम टू डिस्क्लोज इन टर्न टू द कंप्लायंस ऑफिसर. अगर वो मैटर उनके रिलेटेड नहीं है या उनके रिलेटेड था, उन्होंने अपना पार्ट कर दिया, and it is a miss from CS is responsible.
Yeah. Next question is from Mr. Kapil Arora. We have already conducted one independent directors meeting for FY 2024-25. Are we required to conduct second meeting also for the FY 24-25? That is
totally discretion. As I said, this requirement per se is a discretion, be it for this year, be it for going forward. Only if you wish to comply with discretionary, आपने एक साल किया, एक साल नहीं किया, तो भी कोई problem नहीं है. It's totally discretionary. Whatever you decide would be okay. If you do it, you can disclose in corporate governance report that as a part of discretionary compliance we have done this, but if you don't do, it's absolutely fine.
Next question is from Kavita ji. Does the company need to change their organogram to comply with compliance officer required to be one level below the board?
Yeah.
I think, okay, yeah, that is there. Yeah, please, any further questions? You may please raise your hand. We will allow to speak. Any further questions? I think there are, yeah, Heman ji.
Yes, yes. Okay. I think I have seen that up to the 1,000 valuation companies need to appoint independent director, one independent director, woman independent director. Whether it is increased to 2,000 companies or only the 1,000 companies are required to follow this.
So it has been increased from 1,001 to 2,000, but as of now, this is a discretionary requirement, not a mandatory requirement.
Okay.
They are promoting companies to do it, but if you don't do it, it's not a non-compliance.
Okay, that's great. Thank you. Because I have not seen in the amendment. Therefore, I was worried about that whether we have non-comply or what exactly.
So it was there. Maybe you missed it.
Okay, great. Thank you very much.
No problem.
Yes. Any other questions, please?
So
Hi, this is Kavita here.
Hi, Kavita.
Yeah, hi, this is Kavita here. So thanks, Anshu, for my question for the organogram. So where do we draw this inference from? Like SEBI circular is just saying that one level below the board. So how do we draw this inference that the organogram has to be changed and the board has to pass a resolution for that?
So I did not say board has to pass any resolution for that, but see, it says one level below, right? Particularly, I will be very honest, I am propagating this interpretation that needs to be one level below. See, according to me, in my thought, SEBI is trying to say, lot many times, again same thing, that company secretary says हमने तो CFO को बता दिया था या हमने तो इसको XYZ जिसको भी हमारा रिपोर्टिंग है उसको बता दिया था कि ये चीजें करनी है या ऐसी नहीं हो रही है, ऐसे होनी चाहिए, बट उसने हमारी सुनी नहीं, CFO ने हमको डांट दिया, भगा दिया, हमने उसको बता दिया था, right? But this has been come to SEBI's notice many a time. So on both sides, that is on employment side as well as on the practice side by secretarial auditor. I think SEBI has tried to empower the company secretary as a profession, as that my view, SEBI is saying that you people on employment side as well as on audit side, be an extended arm of SEBI as well as stock exchanges towards implementation of the listing regulations and governance and etc. We need to be an extended arm. They are looking at as an extended arm to us. So, जो हमारा common complaint होता था हम company secretaries का beat you, beat me, that हमारी कोई सुनता नहीं organization. We don't have that stature. No, we don't have that say. Right? हमको दबाया जाता है जो भी है अगर ऐसा कुछ किसी का है complaint. So, SEBI has empowered the company secretary on both sides. And if you take an interpretation, firstly it is coming that, the word is also used one level below board, right? If I don't take this interpretation that one level below board is you reporting to person who CFO is not one level, who himself is not one level. No, say for example, CFO is one level below, right? He is reporting to the managing director. Let's take an example. And the CS is reporting to CFO. How are we meeting that requirement of CS being one level below? In this example that I gave, won't it be two level below?
Correct. That's right.
Yeah, so one is the example I guess, and other is the thought that I think we should, that is the intent what I feel, because क्या होता है बहुत सारी companies में compliance is still looked as a compliance cost burden, right? So company 5,000 करोड़ की है turnover, but compliance officer के लिए CTC फिर भी अभी 10 लाख 15 लाख 25 लाख की है. So what I think it means is that if your company is of that size, that stature, that turnover 5,000 10 crore जो भी आपका है, a person or compliance officer has to be also of that stature that you would give him that stature of one level below. So if this being the requirement, आप 5,000 की कंपनी हो, आप 10,000 वाले सीटीसी को पर्सन को आप उसको वो वन लेवल बिलो का बोर्ड डेजिग्नेशन दोगे? नो, नहीं दोगे। बट ये वही अगर पर्सन उस लेवल का है जहां पे उसको वन लेवल बिलो देना है, यू विल ऑफ कोर्स हायर ए पर्सन हु इज रिक्वायर्ड for the size and complexity of your business of 5,000 crore.
Very true.
Yeah.
Yeah. Understood. Thank you.
Thank you.
Yeah. Saurabh, yes, the recording will be made available. It will be uploaded on the YouTube channel as well, as this is a lecture meeting intended for the benefit of larger corporates as well as professionals alike. So that will be there. And yes, any other questions, or we can wind the session?
And a PPT would also be made available. I share with Raj, with you, and you can in turn share with everyone.
Thank you very much, ma'am. That's really kind. So, because it will be immensely useful for us as well to
100%,
refer.
100%. This PPT more or less is already out in the market, and I don't mind sharing with this forum also.
Thank you very much, ma'am. And also the chat window is full of messages thanking you for the wonderful session. It has been really informative and enlightening experience. And I, CS Raj Kapadia, on behalf of the Commercial and Allied Laws Committee of the Chamber of Tax Consultant, has the privilege of offering you a very hearty and formal vote of thanks. You have covered a really wide playing field of the disclosure regulations, whether it is RPT, whether it is other relevant disclosures, the integrated this disclosure, this portal which is there, also the insider trading regulations, very wonderfully and very easily covered along with relevant examples. So I thank you, ma'am, for this session. And I also thank the chamber for the Commercial Allied Laws Committee, Parth and Malika ji, for holding such informative sessions for the participants. I also thank our colleague CS Kaushik Bhai Javeri, who has coordinated the session and also whose inputs are really he has been constantly giving inputs which have been valuable for the participants. And with that, we conclude this session. And please, participants, stay tuned. We will be back with more sessions which will be of immense use on various topics. We will be back, and the same will be announced in due course. Please stay tuned, and looking forward to more such sessions, ma'am. Thank you very much, ma'am. And thank you all for attending. Thank you
Thank
very
you,
much.
Raj. Thank you. Thank you, ma'am.
Raj. Thank you, everybody. Thank you for being giving such patient listening and being a wonderful audience. Thank you so much.
Thank you.
Generally, I like taking session which is full of interaction, but it has Zoom meeting has its own constraints.
Yes. Yes, but it is really has been a good experience, and it will be also there on YouTube channel, which will also can be shared for the reference of larger audience, ma'am.
Yeah.
Yeah.
Sure.
Thank you very much. Bye, ma'am.
Bye.